Yeah. So instead of doing, let me take my hater blockers off because I couldn't see you the whole time. So instead of doing individual oil stocks, let's just do all of them right now. So this is the XLE. This is the spider. It's the energy spider, but it's really just the oil spider because this is dominated by Exxon and Chevron, and it has some other companies like Marathon, Occidental, the ONEOK, Petroleum, all of these big oil names. These are not the fracking and exploration companies. These are the big boys, the big boy oil companies that are down but under less of a threat from this international oil situation like the fracking exploration oil companies are. These are the ones that are going to make it through. This is Brian Lewis with MMT Investing, and things just changed. So let's see what this thing looks like, because I have not even taken a look at this. I've been looking at some individual oil companies, but I haven't checked out the whole oil spider. So yeah, XLE Energy is just the big oils, and we had a ABC corrective wave down off. This is what the S&P did, and you get a 1, 2, 3, 4, 5, and then a down. On the S&P, we get some big reversal points here, and then this went from, what's this number? 23. Yeah, okay. Less than half. That's down. That's pretty far down. And it certainly didn't bounce as big as the whole S&P bounced, and it didn't get this big bounce right off the bottom like we saw in a lot of stocks. It just kind of gradually working its way back up. And now we have the oil prices looking like they're going to come back up over the next 2 months and then go down for the rest of the year. So that should be good for the oil stocks over the next couple of months, but it also looks like that we have a down move coming in the entire credit contraction cycle, which would be pulling these guys down with it, just like it pulled them down here and here and here. So these down moves in the credit contraction cycle pull everything down, including these. And so this, I guess this would be a short for the next week or two. This is not financial advice. And this thing didn't bounce way up high to an area that has a bunch of downside for a short, but this is the energy sector fund, and this is one of the sectors that really just eats it in these credit contraction down cycles. So this is a monetary contraction. That's what Hedgeye calls a quad 4. And this is when you have less money available in the international banking system, which means inflation is decreasing, you get deflation, and you get negative growth at the same time, and you get this kind of down, bouncy kind of cycle shape. And the third bounce is not always down, sometimes it's up, but you still will get a turnover, and it looks like we're on a turnover point now. So I think this would be a short, and it should be an okay short. 40, yeah, it's kind of a mediocre short over a couple of weeks here, I think. And then when we get down to the end of this cycle, I think it would be in June, and I think this energy sector thing is going to pop out of here at the end of the cycle, and I like this thing at that point. And I don't know if I like the ETF or just some individual stocks better, but I have started to like shorting the ETFs better than shorting individual stocks, just because of how the USO oil contango happened. It's just the way that the futures are built into the ETFs. It's entirely possible to have the ETF worth less than the holdings inside of the ETF. The ETF itself can do worse than the stocks. that are inside the ETF, which is impressive. And that's kind of something that Michael Burry was warning about, calling this whole thing like a big ETF bubble and saying the ETFs are going to collapse. So I like this as a short for right now, and then probably the individual stocks inside of the energy sector ETF, which are just the big oil companies, Chevron, Exxon, and then there's like, Shell and BP. There's some other big ones that did not look like they're in here. It only showed the top 15 holdings, but if they are in here, they're tiny percentage, and those are a lot of good oil energy companies after the cycle reverses to take a look at. But I think the oil right now is just kind of depressed, and it should move down a bit, but it doesn't look like it has the room to go down like some of the other stocks that are up here do. But I don't know. The oil prices have already started going up, so it's like a credit down and an oil up, and I don't know what happens really. I think this just kind of might be boring. I think it will come down right now, and I think this is going to be really hard to predict what oil does after this. It already crashed, and it's the credit cycle against the oil prices rising now. It's really complicated. I think I just stay away from this one. Both because it's hard to predict, and it could be kind of uninteresting. I don't know. Yeah, I don't really like fighting against the rising oil prices as a short, and I don't know where a downside target would be, and I don't like fighting against the credit contraction cycle as a long for sure. But as soon as we get out of this credit contraction cycle, then the whole economy expansion will be supporting this stuff, and you get the rising oil prices, and that should be a really good time to get into this one. So let's look at the XLE, and I'll put a list of the stocks. I should probably have listed them out somewhere, but I'll put them in the description. It's like Occidental, Petroleum, Valero, Marathon, Chevron, and Exxon are the top two in this spider, and I'll put them in the description. Oil stocks, big oil, not oil tankers. If you want to look at oil tankers, I have a bunch of oil tanker videos, which is a completely different play on this oil oversupply situation, and those are very cool. The oil tankers like the Nordic American tankers, NAT, and DHT, the double hull tankers. TNK is the TK tankers. EURN is Euronav tankers. Those are all the crude oil storage tankers that are holding all of this excess oversupply of oil, and those have just huge earnings reports right now, and full capacity, full employment, and they're charging ridiculous day rates for oil storage right now, and those are big. And then just taking a look at the product oil tankers like STNG Scorpio tankers, PXS. Ardmore was one of those, and Zakos has a bunch of product tankers. Those ones are they look like they could get a big up move in the short term because they're starting to use product like refined oil tankers to store crude now because there's such a demand for crude storage, and those stocks are starting to shoot up now, and that should be more of a short term play than the crude tankers are. That'll be storing this oil for the next couple of years probably. So that's a look at oil, and then I guess I could mention the whole contango thing. So right back here, we got a spot in the oil contracts that hit a low, and then we had the future prices out here higher, and when the contract spot price is lower than the future price, that's called contango, and that is a problem when your contract ends and you're trying to wait for it to go up and it's not going up, and then you get to the end of the contract and it says that you have to take physical delivery of a bunch of barrels of oil, and people that are speculating don't realize they have to take physical delivery of oil, and they start freaking out and they just start selling those contracts off at any price. And we saw the oil spot contracts go down to like minus 40 relative to the futures price. And that was that crazy contango thing. But we're on the uptrend on the price now, should be like 2 months. And it's like it's going to be like 4 or 5 months where there's way more oil than we have storage for, and all of these tankers and everything are going to be getting all this extra oil, and then all these oil energy stocks are going to have a really tough competition. Even though OPEC said they want to reduce the world oil supply by 20%, it's already an oversupply, and it will continue to be an oversupply for a long time, like 5 months or something. So all these oil companies in here are competing with that oversupply, but the oversupply should be decreasing, the prices should be increasing, and these big oil companies should be improving off of their lows here when we end this down cycle. During this down cycle, much harder to predict, and I don't have a price target, but just general time target is just wait until this credit cycle ends, and I'll be very interested in tech and energy again as a long. Right now, I'm just kind of sorting out my shorts and holding cash and trying to protect my money. So this is not investment advice. Please hit the like button, and happy trading.